Now, the S&P 500 has historically been considered a diversified index, but a handful of names here, or specifically the Mag 7, has become a bigger and bigger percentage of the S&P 500, and that takes away an element of that safe, diversified element of the major index. So as an example, Mag 7 exposure in 2015 as a percentage of the S&P 500 was 12%, and today that Mag 7 is at 34%. So from 12 to 34%, it's a drastic move. And obviously, I'm sure everyone knows the Mag 7 we're talking about here: Apple, Amazon, Microsoft, Alphabet, Meta, Nvidia, and Tesla. And and that percentage, when you have such a big percentage of the S&P 500 in a handful of names, it increases the risk significantly. So I'll give you some examples here. In January 2023, that percentage of the S&P 500 for Mag 7 was sub 20%, so 19%. Again, also a lot lower than where it is right now, 34%. And earlier this year, it went from 33% to 27%. So when you have that percentage drop off, what that tells you is these big companies are going down faster than the rest of the market. So one of the examples that I can give too is our New Era strategy, which has very little Mag 7 exposure. Through April, the market was down a lot, and we managed to not lose any money through April, and that was because our bottoms-up analysis of these high-quality companies were hanging in there really well, while the major indexes were being driven down really fast as these big companies were declining faster than the market. And I'll also use an example here, if we can take a look at this image on the screen here. So this shows going back to what Michael, what you were saying about the TMT or 99-2000 tech bubble. So there was similar concentration risk here, and the telecommunications and media and technology, the TMT share as a percentage of the S&P was around 45%. And as that tech bubble burst, it went all the way down to 20%. And again, this just means that those types of stocks were declining significantly faster. And as you can see in this image now, again, the TMT sector is around 45% or close to it as a percentage of the S&P. So we're again reaching the very high and concentrated levels that we saw around the peak of the tech bubble.